Hi, it's Morty Sill broadcasting from my trading room in London. I just want to make a short broadcast about Northern Rock, because I understand Sir Richard Branson, Virgin Consortium, is thinking of buying it. There's been a lot of the pundits and the journalists have been writing a lot about Northern Rock, and a lot of it is way off the mark. It reminds me of when you get technical analysts coming out and saying they're predicting a stock market crash because of the chart patterns. My experience with this is that often later you find that it's got nothing to do with global conditions, subprime mortgages. It's usually got to do with large players manipulating the market. Not necessarily illegally, but they are still manipulating the market. And there's no doubt that the demise, or the imminent demise, of Northern Rock as a brand is going to be due to market manipulation. You have to ask yourself why the share price fell. Northern Rock is a well-run business, it's profitable, and it's one of the top 10 banks in the UK. There was no reason for it to go under. It had a slightly unusual business model, but it was accepted by the Bank of England. It worked in a regulatory environment, and there's no reason why it should have failed. What was bizarre is the way the share price was driven down. And the share price was driven down by hedge funds short-selling Northern Rock shares. Now, as you know, to short-sell, someone has to lend you the shares, and the only place one could go to get decent size are the pension funds and other institutions who hold Northern Rock stock, and essentially they lent the stock to the hedge funds so that they could drive the price down. In doing so, the hedge funds made billions of pounds in less than 12 months. Quite how this was beneficial to the pension funds is not quite obvious to me, unless they were trying to get out of banking stocks. But certainly it was nothing to do with subprime mortgages. This was there wasn't a real run on the bank, although I understand Northern Rock has had to take the Bank of England loan, and I think, if I remember from the weekend papers, borrowed something like 13 billion. But all banks lend long and borrow short. If you're a bank and you offer mortgages, for example, then you are lending for 25 years, but your depositors can take funds out either instantly or with 3 months' notice. So there's always a possibility of a run on a bank, and there are processes and mechanisms in place to provide liquidity should this happen, so that the banking system doesn't go under. I think the most important thing is, if you see something dramatic happen in finance, there's usually something very suspicious going on in the background, and it is rarely as easily explained as it would seem to be in the newspapers. This is Morty Sill saying goodbye from my trading room in London.